Hello, you're watching Gold News on the GIGOS channel. There are several strategies for the precious metal trading, and the most popular of them are concepts of bulls and bears. The terminology seems logical. When attacking, the bear strikes from top to bottom. The bull, on the other hand, puts out its horns and hits the opponent from the bottom up. The same happens on the stock exchange. The bulls believe that the price of gold will rise and accordingly buy gold. The bears, on the contrary, predict a decline in the rate of the yellow metal and therefore sell it. The origin of terms dates back to the oldest stock exchange, the English one. The merchants met in taverns and discussed their participation in the deals. If historians are to be trusted, the cunning English traders were looking for a chance to profit at someone else's expense. In the hope of a fall in the rate, they sold gold, which in fact they did not have. That is, they started selling the bear skin before catching the bear. And for this they were nicknamed bear skin merchants. Over time, the playful name turned into the exchange term bears. The concept of bull was introduced to everyday life by the satirist John Arbuthnot. He invented the hero John Bull, an Englishman who was portrayed as a humanoid bull gentleman. According to the plot of the sarcastic essay, John Bull was the constant victim of bear attacks and jokes, and once there was a conflict between them. The famous character was adopted by stockbrokers and soon began to be actively used around the world. In 1714, the term bull, in the sense of stock market optimist, was included in the Oxford Dictionary. Certain conditions in the global economy contribute to the formation of bullish, that is, suggesting an increase in the value of gold moods. First of all, this is a sharp and significant increase in inflation, the weakening of production and socio-political upheavals in the world. In other words, the current situation in the global economy favors the bulls. Against the backdrop of these events, the Financial Times and the Research Center at the University of Chicago conducted a survey of macroeconomists. More than 65% of respondents expect a recession to hit the United States as early as 2023. The echoes of the weakening of the world's leading economy are usually felt throughout the globe. This may be exactly the powerful push that the bulls expected and which will bring the price of gold to a new round of growth, which is confirmed by the statements of many experts. Thus, the investment company's Blackstone talks about a potential increase in the price of the precious metal by 20% next year. The stability of the yellow metal during the crisis constantly arouses an increased interest in the asset from both investors and ordinary people. Experience shows that in the long run, the bulls remain right. The price of gold only increases in the course of time. It is obvious that a person who owns physical gold minimizes financial risks and accumulates savings. Gold has been and remains a stable and reliable investment asset. Thank you for watching us till the end. And whose position is closer to you, of bears or bulls? Write in the comments what you expect from the gold rate. If you liked the video and learned something useful, please click the like, subscribe to the channel and share the video with your friends on social media. See you soon!